Hi, and welcome to the first Sanford Advisors Software and Internet Monthly Report for 2023. As usual, we are going to review the previous month's M&A and venture capital activity across the entire technology landscape. So let's dive in on the M&A front. To start 2023 off, we saw a handful of large cap M&A deals dominate the landscape. In particular, the Thomson Reuters acquisition of SurePrep. We'll talk more about this deal later, but definitely an interesting transaction at 8.3 times revenue, despite SurePrep being non-SaaS. As a summary, though, we saw 8.8 billion in disclosed transaction value for a median revenue multiple of 4.1 times, and consistent deal volume with 116 transactions to start the year. Obviously, it's still early days for 2023, but comparatively speaking, the annualized deal volume from a dollar perspective for the year is well below 2022, down over 75%. In addition, the deal volume is down almost 25% on an annualized basis. As we look at the overall tech M&A landscape, we have certainly seen a bit of a lull in terms of activity, but expect this to improve as the year progresses. Looking at historical revenue multiples in software and SaaS, we saw a correction to start the year in terms of valuations on the median as well as the bottom 25th percentile. However, we've continued to see price compression at the top end of the spectrum. But given the large expansion we saw for those assets in early 2022, it's not overly surprising. What is surprising, however, is the inverse relationship we are starting to see for valuations of traditional SaaS businesses versus non-SaaS. As hinted at earlier, a lot of this is being driven by the large SurePrep deal at over 8 times revenue. SurePrep is technically non-SaaS, but it uses a transactional-based revenue model that is very similar to SaaS and had material strategic value to the acquirer. So we are seeing SaaS-like valuations drive the non-SaaS segment to start 2023, and we expect this inverse relationship to correct itself as the year continues. From an overall volume perspective, it was nice to see January's increase to a new normal level after the holiday slowdown of December. We are clearly still tracking below the highs from early 2022, but the decline has certainly reversed. Switching gears to the venture capital side of things now, let's take a look at how 2023 started out from an investment perspective. We saw over $5 billion of invested capital for the month at a medium deal value size of 4.2 million and over 300 venture capital transactions for the month. The most notable being the over $400 million raised by Netskope, albeit at a less than 2 times revenue multiple. Looking at the monthly deal volume for venture capital investments, we saw a continuation of the decline in volume to a 2-year low. This is across all stages of VC investment, with a material decline in the early and late stage investments. With interest rates increasing and a more macro decline in the public equity markets for the technology sector, we are seeing less willingness to speculate on growth at all costs, and an increase in the importance of positive cash flow, which has hindered the VC market generally. This becomes even more transparent as we look at the annualized data for January, which implies over a 50% decline in deal volume and an over 35% decline in dollars invested for the year. Now, it's obviously early days with plenty of time to reverse this trend, but the macro headwinds are likely to continue to put pressure on the VC channel as a viable solution for the average tech company in 2023. What really drives that last point home is the sharp decline in VC valuations. It is across all stages, but in particular, what is interesting is the dramatic decline in early stage investing to essentially the same median valuations as the M&A market. We are looking forward to some more data points as the year progresses here, but out of the gates, 2023 would indicate the dilution trade-off for high growth companies looking at VC funding may not be greater than the ROI on traditional M&A deals. And with that, we conclude this month's review of the Software and Internet M&A and VC market update. As always, thanks for listening, and we hope to see you next month.